Welcome back to the channel. I'm Algabot, and today we're taking an educational look at an expert advisor for MetaTrader 5 called the Commitment Ratio Pullback. This is a with-trend, pullback continuation strategy, and it's built around one original idea. Instead of chasing breakouts, it waits for a healthy dip inside a trend and then buys the reclaim. It combines a fast and slow-moving average with a custom regime filter and a cooled-off momentum reading. By the end of this video, you'll understand exactly how it defines a committed trend, how it times its entries, and how it manages risk. Remember, this is educational information only, not financial advice. Let's start with the big picture. The Commitment Ratio Pullback is a trend-following expert advisor that only wants to trade in the direction the market is already moving, and only when that move looks genuinely committed. The heart of the strategy is a value the author calls the commitment ratio. Every candle travels a total range from its high to its low, but only part of that travel ends up as body, the distance between the open and the close. The rest is rejected wick. The commitment ratio adds up all the body sizes over a window of recent bars and divides by the sum of all the ranges. That gives a number between 0 and 1. When the market is being genuinely pushed, candles print large bodies and small wicks, so the ratio is high. When the market is chopping and indecisive, candles print small bodies and long two-sided wicks, so the ratio is low. In this way, the commitment ratio acts as a regime filter. It tells the strategy when order flow is committed enough that a trend is actually worth following. On top of that, the strategy uses a fast and a slow exponential moving average to define the trend direction, and it uses the fast average as the line that a pullback has to reclaim. A short period relative strength index, or RSI, is used as a timing gate. The strategy wants momentum to have cooled during the dip, but not reached an exhaustion extreme, so it only acts when RSI sits inside a midband around 50. The default playground is a liquid trending market such as Eurist, PUST, or gold on the 15-minute up to the 1-hour chart. This approach is designed for traders who prefer patient, structured continuation entries rather than fast scalping. As always, trading involves risk, and losses are a normal part of any strategy. Now let's walk through the exact logic, step by step. The strategy only evaluates a new setup when a bar has fully closed, so it never acts on an unfinished candle. The first check is the regime gate. The strategy measures the commitment ratio over the commitment window, 14 bars by default, and it requires that ratio to be at or above the commitment threshold, which defaults to 0.55. If recent travel has been mostly wick and indecision, the ratio falls below the threshold and no trade is considered. This is the filter that keeps the strategy out of low conviction chop. Next comes direction, and the strategy demands a double confirmation. For a long, the fast-moving average must be above the slow-moving average, and the net body flow, which is the sum of close minus open over that same window, must be positive. Both the moving average relationship and the raw order flow have to agree on up before a long is allowed. A short is the exact mirror. Then comes the pullback and reclaim, which is the actual entry pattern. For a long, the prior bar must have closed below the fast-moving average, a shallow dip back toward the mean, and then the just closed bar must close back above the fast-moving average with an up body. That's a fresh reclaim from below. For a short, price bounces above the fast average and then gets rejected back below it with a down body. The final filter is timing. The RSI must sit inside a band around 50, 12 points wide by default, meaning roughly 38 to 62. This confirms momentum cooled during the dip but never reached an extreme, so the strategy aims to buy the rest of the move, not the blow-off. Risk management is structural. The stop is placed just beyond the swing extreme of the recent pullback window, then buffered by a fraction of the average true range. The take profit is set at a reward-to-risk multiple of that stop distance, 2 to 1 by default. Once price travels 1 ATR in favor, the stop is pulled to break even. And if the fast and slow-moving average relationship flips against an open trade, the position is closed immediately. Only one position per magic number is ever open, so exposure stays bounded. Let's read through the actual MQL5 code on screen. At the top are the input parameters. FastEma and SlowEma define the two moving averages. Commit window and commit threshold control the commitment ratio regime filter. RSI period and RsiHalfBand set the momentum timing band. ATR period, pullback loopback, and stop ATR buffer shape the structural stop, while reward risk sets the target as a multiple of that stop, and break-even ATR controls the break-even lock. There's also a spread cap, the lot size, and the magic number. Now look at the long block. The Boolean long setup is true only when up is true, meaning the fast EMA is above the slow EMA, and net body is positive, and the prior close was below the fast EMA, and the current close is back above it, and the candle has a bullish up body. When all of those line up, the code reads the ask price as the entry, sets the stop just below the swing low minus the ATR buffer, measures the risk, and places the order with trade.buy. The take profit is the entry plus reward risk times that risk distance. The short block is the exact mirror. Short setup requires down to be true, negative net body, a prior close above the fast EMA, a current close back below it, and a bearish down body. It reads the bid as entry, sets the stop just above the swing high plus the buffer, and sends trade.sell with a symmetrical target below the entry. Same logic, opposite direction. Let's walk through this illustration candle by candle to see how the strategy would read the market. On the price chart, you can see two moving averages, the gold fast EMA and the blue slow EMA, and below is the RSI panel with its midband drawn between 38 and 62, and the midline at 50. Look at the first three candles. Price is stepping higher. The fast EMA is riding above the slow EMA, and those candles print solid up bodies with small wicks. That's exactly the committed order flow the commitment ratio is looking for. And because the fast average sits above the slow one, the trend direction is up. So far no entry. The strategy is just observing a healthy uptrend. Now watch the fourth candle. Price pulls back and closes below the fast EMA, a shallow dip toward the mean. Notice how the RSI cools at the same time, dropping down inside the midband, near the lower edge but not falling to an exhaustion extreme. This is the setup the strategy waits for, a dip that resets momentum without breaking the trend. The fifth candle is the confirmation. It closes back above the fast EMA with a bullish up body, reclaiming the line from below. The trend is up, net body flow is positive, RSI is inside the band, and the reclaim is complete. That's where you see the buy entry marker. The stop is placed just below the recent swing low, buffered by a fraction of the average true range, and the take profit is set at 2 times that risk distance, our reward to risk of 2 to 1. From there, candles 6 and 7 push higher with committed bodies, and price reaches the take profit target above. The long idea has played out. Notice the strategy didn't chase the top. It bought the pullback and let the continuation carry price to the target. Now the market rolls over. On candles 8 and 9 price turns down, and around candle 10 and 11 the fast EMA crosses below the slow EMA. The trend has flipped to down, so the strategy now only looks for short continuations. Watch candle 10. Price bounces up and closes above the fast EMA, a shallow countertrend push, while RSI lifts back into the midband. Candle 11 is the mirror confirmation. Price gets rejected and closes back below the fast EMA with a bearish down body. The trend is down, net body flow is negative, RSI is inside the band, and the reclaim from above is complete. That's the sell entry marker. The stop goes just above the recent swing high plus the ATR buffer, and the target sits at 2 times that distance below. Candles 12 and 13 then push lower with committed bodies, and price reaches the lower take profit target. Both trades followed the same blueprint. Wait for a committed trend, wait for a shallow pullback and reclaim of the fast average, confirm with a cooled RSI, and then manage with a structural stop and a 2 to 1 target. This is illustrative only, and in live markets many setups do not reach their target, so losses are a normal outcome. So that's the Commitment Ratio Pullback Expert Advisor. We covered how the commitment ratio measures body versus wick to separate committed trends from chop, how the fast and slow moving averages define direction and give the reclaim line, and how the RSI midband times the entry after a shallow dip. We also walked through the structural stop, the reward to risk target, the break-even lock, and the trend flip exit. Remember, everything here is educational information only, and not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, Leave a comment with the strategy you'd like analyzed next, and subscribe for more MetaTrader 5 strategy walkthroughs. You can learn more over at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.